Lloyds Banking Group has sold its fund management arm, Scottish Widows Investment Partnership, to Aberdeen Asset Management for £660 million, as it looks to shore up cash ahead of its planned privatisation. Lloyds said in a statement that Aberdeen will pay in 9.9% company shares worth 132 million stocks and £560 million, as well as stumping up £100 million to be paid over 5 years. The £100 million payment will depend on the performance of a strategic relationship between the two firms, whereby Aberdeen will manage assets on behalf of the banking group. Macquarie, the Australian investment banking group, was initially tipped to make an all-cash offer for SWIP for £497 million. However, today's announcement shows that it was eventually pushed out of the race. SWIP currently has £146 billion in funds under management. Lloyds hired Deutsche Bank in April to advise on the sale of the business, which would help the lender meet regulatory demands to raise more capital. UK banks are having to consider further disposal after the Bank of England said they must raise extra capital by the end of the year to be in a position to absorb future loan losses. The UK government will try to raise £3.2 billion by selling off 6% of its stake in Lloyds, which had to be bailed out with taxpayer cash at the height of the financial crisis. It would see the government reduce its stake in Lloyds to 32.7% by selling off some of its shares for 75p each, above the 73.6p paid during the 2008 bailout to large investors.